This is the basic we need to understand every time. Trading in lots. We have to understand when we're buying, we can't go in the market buy one, let's say $1. No, we buy by lot. Okay, so when you go to the grocery store, in order for you to understand what lot in and trading, when you go to the grocery store and you want to buy eggs, right? You don't go in the market, you buy one eggs, do you? No, you don't. You don't just go in there and say, I'm gonna buy egg, but I'm gonna go buy one single egg. You won't find that in the supermarket. What do you have to do? You have to buy a dozen of eggs, what we call a lot of 12. The same way, you can't go in the market and buy one single pair. You have to buy of a lot of pair. If you buy a pair like USD JPY, you can't buy one USD JPY. You have to buy a lot of USD JPY. Okay, is that clear to everybody? Give me a thumbs up if you understand that part. Let's wait for the thumbs up to see if everybody got that. Okay, we got it. Okay, so this is the same way. When always refer yourself to the eggs analogy. Okay, you can't buy one egg, you can't buy one pair, you have to buy a lot of it. In a lot of a dozen, you have to buy 12 eggs. Even if you need one egg, you have to buy 12. Okay, the same way, even if you need to buy one pair, you have to buy the whole lot. That's why that you'll understand. So in Forex, it would be just as foolish to buy or sell €1. That make no sense, right? Buy or sell €1. That would make no sense, right? So if here's how they usually do it: you buy a lot of 1,000 unit of money of currency. All right, we call that a micro lot. Or you buy 10,000 unit of currency. We call that a mini lot. Okay, so and also you can buy 100,000 unit. Right, that's the standard lot. Standard lot is 100,000 unit, depending on the broker and the type of account you have. This is the standard. But to make it easy for people to trade, they have mini lot, which is 10,000 of unit, and they have micro lot, is 1,000 of unit. That's mean if you buying 100,000 of units, you have to have more money in your account, and so on. So if you don't have too much money in your account, you buy mini lot. You remember I told you one of the law of trading was control your size, your lot size. You remember that? Yes. Okay. If you remember that. So that's the lot we were now you understand the rules now. Hey, we need to control a lot size, because if you take a lot size, you have $1,000 and you trading 100,000 unit of currency, your $1,000 will go quickly. If you lose it, you might lose it. But if you go to the micro lot, which is 1,000 unit of currency, right? So one trade with 100 pip will get to pip. 100 pip might be cost you only $50. This is why it's easy to trade, even if you don't have a lot of money. You can have $500 or $1,000 when you're in the trading market. You can trade 5 cents per pip. You can trade 50 cents, you can trade $1, you can trade 25 cents per pip. Now, as you practice, you can increase your lot size as you getting efficient. Okay, so that's lot size. Does anybody have question on lot size? Okay, so that's a no. Okay, hopefully everybody understand that. Okay, so what is leverage? In trading, also, whatever you trade, that if you trade options, if you trade stock or crypto or forex, you have to understand leverage. Okay, use all resources like people or borrow capital to increase the potential return. That's all you're doing. Leverage is using other people or borrow money. In our case for forex trading, we're gonna borrow the broker's money. They're gonna give us a leverage so we can increase our position size. Okay, this is leverage. For example, if you are on a lot of I don't know how many people are employee on this class here. If you are an employee, your employer, your job is leveraging you to make more money. Okay. All right. So that's what Walmart leveraging low wages to make massive amount of profit. Okay. They pay you the minimum wage and they making a bunch of money by hiring all these people in those stores. Okay. That's leverage. They leveraging resources. Okay. So in our case, if you're buying a home, for those of you who bought home, okay, you have to get a loan from the bank, right? You only have to bring 3.5% if you're a first-time home buyer. I'm a real estate investor. I know that well. Okay, so borrow capital, you use 97.5% of the bank money to buy the house. That's leverage. You leverage the bank money to buy the house. You don't have the $500,000 to buy the house, but you have 15,000. You borrow 3.5%. You put 3.5% down. You leverage the bank money. So as an investor, what I do when I buy a property, after I do all the analysis, I leverage as little money I can come up in my pocket to buy this property and rent it to other people, have other people pay it for me. I leverage the bank, first of all, to get the money to buy the house. When I rent the house, I leverage the people to work for me, to pay me to stay at the house so I can get a return every month, the cash flow, so I can make money renting the house. That's leverage to the best of it. Okay? So if you an investor, you need to learn to do that. If you're a trader, if you're a trader, you need to learn that. If you any type of investor, you need to learn leverage. This is a key to increase your potential return. But also the same way, if the deal just fail as well, you're gonna be responsible for a lot of money. Okay, the same way leverage gives you ability to increase your position size. Instead of do a trade where you can make $50, you can use leverage to make the same trade and try to make $1,000. But if you lose, leverage maximize your loss as well. Okay, so that's why leverage is a good thing. Leverage can be dangerous at the same time if you don't know what you're doing. Okay, because if you borrow the house money, you have to pay it back. So or you blow your account quickly. All right, that's leverage. 7 ways to use leverage to make money. So I'm giving you a little bit more because that's the kind of guy I am. I when you when you go ahead, Andre. I see you have your hands up. Go ahead.
Yeah, yeah. When you say in leverage, like in trading, so you can use the broker's money to increase your potential.
Hmm.
Uh, so I that means I can borrow uh, broker's money for the potential, for the possibility to make more.
Where?
But if will the broker let me lose a lot of money from the broker, and then I'm gonna have to repay that broker that money back? That's how it works.
No,
If I
and
lose the money from the broker and I'm gonna have to pay this back.
no. For forex trading, you don't have to,
Okay.
because once your position is equal to your account size, they will kick you out.
Oh, okay. All right.
That's what good with forex. If you're trading forex or index or um, one of these, what they did, they give you leverage to be able to increase your position size. Okay, that's mean they're using their capital to let you do that. Now you have the ability to make more money, but they're not gonna let your account go past what you have in it. So if you have $10,000, you might make a trade where you have a possibility to make $20,000. But if you start losing, if the position is going against you, what they do, they look at you negative 1,000, 2,000, 3,000, 5,000, 6,000. When your position get to negative 10,000, they will automatically stop your trade, and then your account is zero now. Okay, they don't let you. They let you use the leverage to put a bigger position, but they don't let you use their money to lose their money.
Based
Okay.
on what you say, does that mean
Mhm.
they required is there is a certain type of margin requirement when
Th-
you
th-
use leverage?
yeah, they give you. We're gonna get to margin in the next class, I think. So they give you a margin 1 to, let's say some broker give you 1 to 30. You have a margin of 1 to 30. So if you make a deposit of $100, you can open a position that's 30 times that $100. Okay, so that's mean 30 times 100 is what? Uh 3,000, is that right? 100 times 30.
Yes.
3,000.
300, right? 300? 3,000? Oh man,
Thirty
Yeah,
thousand.
3,000.
I'm
3,000.
bad at
30
math.
times
3,000,
100.
3,000.
That's three
3,000.
thousand. 3,000. You put
3,000.
1 0. 3,000.
Yes, yeah. That's the margin. You will get to margin. So you'll understand it once we put leverage and margin together. So whatever broker you have, they have a set leverage they give you. Some give you 1 to 100, some 1 to 30, 1 to 150. That's meaning for every dollar they you can trade up to $150. If it's a 1 to 100, for every dollar you can put a position, a trade position that's up to $100. But if you losing, if you going negative, as soon as you get negative to that dollar, they close your position. They're not gonna let you use their. It's just to maximize your position size if it's going in your favor. Let's say if you have $500 in the account, and now you have a leverage of 100. That's mean you can put a position up to 5,000, right? So then if your position is in your favor, you can do one trade where your maximum loss is 500. But you can make your maximum profit can be 2,000, for example.
Yeah.
Right? So as long as it's going toward your 2,000, you're gonna keep your position open until you hit your profit, and then they close it for you. But if it's going the other way, your maximum loss will be that 500 you have there on account. I think that's what we have to understand in leverage when we trading forex or index. This is how they use it. But if you are doing options for option traders, what they let you do, they let you lose more than you have in their account.
Wow.
So what they do at this point, if you lose, if the option is expired and you owe money, they do a margin call. The margin call, that's mean they tell you, hey, your account is negative $200 because you have $500, but you lose $700 in the option. So you need to bring 200 to your account to break even your account to zero, or to add more money to your account. At least you have to bring 200. You can put more in there. That's why a lot of people, you have to know what you're doing to trade options. Okay, is that clear? All right, very good.
So
So that
I got a question.
yes.
So why exactly, if you do options, they would let you lose the money?
Well,
What
I
the
mean,
reason?
that's they because they want to make money. The broker want to make money.
Oh,
If you in the option deal, you need more than $500 to trade option. Now it's easier to trade option with smaller amount of money, right? With all the other brokers, now I think you don't need to have a lot of money to trade options. But yeah, they go and they're in there to make money. So that's why you have to know what you're doing, because you're gonna have received the margin call. But yeah, that's why they don't let everybody trade options. Now with Robinhood and a bunch of other smaller venue, they give you the opportunity. So you still have to manage your money. Okay. All right. So let's 7 ways we leverage. Leverage it's using everything. Okay. Other people's idea. Okay. Idea become product, company's investment. When you buy a book, for example, you leveraging the author's idea. Okay. Right now, if you're part of this class, you leveraging all my knowledge right now. That's leverage. I mean, that's real leverage, because it's a 100% return. You don't pay anything. Right? Okay. Wow, that's a good example. That's a great example. Okay. Leverage. All right. Number 2, create a system. Okay. Automation, internet, McDonald's, Amazon.com system that work by themselves. Okay. McDonald's is a great, that's leverage a system. Okay. Right now, what's happening around the world right now, they leveraging automation. Okay. And a lot of people are losing their job right now because Amazon gonna lay off 60,000 people. 60,000. They're gonna be replacing by automation. They don't need somebody to do it. Now the The machine and the computer will do it for them. Okay, so that's leverage. Network, the people you know, right? So, like I think, I think one of the students was saying now, he leverage OS and RE to come to this class because now the people he knows give him access to this class, right? So that's leverage, right? So the same way, if you're an investor, if I'm buying a property right now, I don't have enough money to buy it. I'm gonna leverage my network. I'm gonna call my brothers. I'm gonna call the people I know. Hey, I have a great deal here. Here's all the data. Do you want to be part of it? Now I'm leverage the other people's money to make a great deal. So that's leverage. That's networking. Okay, on other people's time. Okay, so when there is right now, it's getting cold. I live in Connecticut. So when it's cold like that, I don't want to go outside to shovel snow. I hire someone to come clean up my driveway. I'm leveraging somebody else's time. Okay. Instead of me going out there, I pay somebody $20. Okay. I stay warm at my house. They go out here and clean me up. So that's other people's leverage, other people's time. For those of you who's employee, you get paid by hour. Your company is leveraging your time. That's all that. Those are all called leverage. Other people's work, right? Lower labor. China is a great leveraging country, right? So people's work, they making a lot of money. Amazon, they have distribution center everywhere around the world, and they hire people low cost. They leveraging those people's energy. Other people's money, bank, car loan, credit card, like we talk about, right? Those are all leverage. Real estate, good debt.
Mwen se mwen yon film, franchman li yon film.
All right, Frito, I think you need to
Yon
put
an met la
yourself,
le film grave ou.
Frito, put yourself on mute for us, or I might have to mute you. All right, I mute you, Frito. Okay, so this is leverage, right? Buy your credit card, you leverage the credit card company. You don't use it to buy clothes, but if you need a car, you buy it, and then you use that car, and then you start making Uber with the car, you do delivery with the car. That's leverage. All right. So if you don't have a car, you do delivery. Why would you get your car? You can rent a car for $20 a day, and then if you make $100, you pay them the $20. You don't have to get insurance. They have insurance. You leverage the car. You don't need to buy. Okay. Okay. Other people's knowledge. You hire somebody who's smarter than you to do something for you. So that's a great way to look at it. So hire smart people. If you're gonna hire people, make sure you hire smart people. Okay. Do you know there's a lot of smart people that doesn't have a job? You can hire them, right? You can leverage the knowledge. So
That's right.
that's what we need to do. We need to leverage. I need to train you guys so I can leverage your knowledge, right? I'm gonna have you start teaching classes for me. I need to leverage you guys. We're gonna create a school, and you guys gonna be the teachers of the school. All right.
Wow.
I need to leverage you. That's why I'm taking the time to teach you this. I need teachers, okay? Because we need to teach this in every language possible. And you guys are the first one. So the more money we make, I make more than I can pay you. That's leverage. Okay. Right now, I'm doing it for free. Tomorrow, you will work for me, and then I'm gonna get my money back. That's the idea. That's leverage. All right. Okay. The end. Is there any question?
Wow. This is great.
All right. Yes, I see David with his hand. Go ahead, David. David, I think you're on mute. You have to unmute yourself. We can't hear you. Okay, I guess not. David was not. That was an accident. Okay. All right. So that's the end of the class. David, you got the floor. I see you raise your hands again. But you're on mute. You have to remove your mute to talk. We can't hear you. Oh, let me put David's hands down. That way we can, if he need to, then he can do it again. All right. So this is the end of trading 101. We'll start with trading 201 in January. We'll keep in touch via email if you have any question in the meanwhile. This is what in the meanwhile, this is what I would want you to do. Let me go and show you. Oh, we got 15 minutes. All right. So this is the software we're going to use. This is the software we're going to use to do to create a demo account, to do technical analysis, and also you can even trade on that platform as well. Okay, so this is what your homework will be. But it's not a homework, but you got to download trading view. This is trading view. So let's go. Let me go here. All right. If you put trading view, if you might have it already. Okay. This is it right here. Trading view. Okay. What you're going to do, you're going to open trading view. That's the software we're going to use. You can get started for free. All right, $0 credit card. But then you're gonna click get started. You can download it to your computer, and once you do it, you're gonna get started. You're gonna create a username and password. You're gonna put your email information. And you can do it in the browser. You can either save tradingview.com and then use the browser every time. You're gonna start playing with TradingView to understand it. Watch video about TradingView. Okay, that would be what I want you to start doing from now until January. Create an account with TradingView, and once you finish creating a TradingView account, you can start for free, but you can buy a subscription. I have a subscription. I have a professional subscription. So you can, there's a beginning subscription. There is I think like 3 or 4 options, right? So for you, I would take the first option. For now, you can get the free one just to create a password, create a username, create an account. You're gonna be limited. But when we start doing things, you're going to need TradingView anyway. So what I would do, I would wait until I would get it downloaded, go to tradingview.com, create an account, username, password, address, whatever the information they send you, and start playing with it. In doing Black Friday, okay, they have up to 70 to 80% off. Then one of the things you have to do during Black Friday is to get the subscription for 1 year or 2 years. It might cost you $49. Okay. that's what I always do. I always renew mine every Black Friday. So this once I log in, I click on Trading View, and the thing pop up saying there's a discount for Black Friday. I click on it, I pay it. I just paid a professional for like, I think it was like $99 for 2 years. So every year I updated it. They added one more, because I'm 1 year always ahead. So I'm always paid for like 3 years. Okay. So it's up to you to do that. This is Trading View. This is, once you have it, this is what it's going to look like. Okay, right now, you can see I have a market open right now. So let's look at, I did tell you, we got about 10 minutes. We're going to look at the US dollar index. Remember, we said the shutdown will affect the US dollar. Remember we said that?
Yes.
Okay, very good. So let's look at now. We're going to look at the US dollar to see what it did today, because they told us in the news today that the Senate. Remember what they say about that? The Senate, they might get a deal
They might get a deal.
to finish to
To
shut
reopen the government.
Open.
to end the shutdown, right?
Yeah.
All right. So let's look at the US dollar index. You see, because I have right now, because I have the professional version, I can open up to 10 screen at the same time. Okay. I don't know. You're not gonna need 10 screen for you, but the first option I think give you 3 or 4
Yeah.
screen.
Yeah.
That'll be enough. So, I'm overachiever, so I always go for the more. Okay. I already have the layout. You'll understand the layout thing. I already have 11 layout open. I saved them. I think with the professional one, you can save up to 50 layout, I think. So this is my dollar index layout. I'm going to open it. We're going to look at today what happened to the dollar index. It's taking a minute. All right, what happened? Where's my dollar index? Oh, there it is. Okay. All right. So look at that. This is the dollar index, guys. Let's do a line chart. This is a line chart. Most people, that's what they use. Okay, the line chart. You can see DXY, the US dollar index. If you want to know what is going on with the dollar, you go to the DXY index, US dollar index. You can see, if you look at this, guys, what do you think it's happening here? Can somebody tell me, what do you think it's happening right now?
I think it's trending upward.
Yeah, it's going up. It's trending upward. That's right. It's in an uptrend, they call it. When you study trend, you'll get it. Okay. So don't worry if you didn't say that. So to get a better picture, if I'm looking at this, it just give me everything. This is now I'm getting a better picture of it. Okay, so we want to see what happened today in the dollar index. So some people might know that, some people might not. So because we in the daily time frame, every little bar you see here, we call it a candlestick. Every candlestick here represents 1 day. Okay, so let's do it this way, so we'll make it easy. Let me remove the trend so you don't need that. Okay, so now this is Monday, and Tuesday start already. Okay, Tuesday start already. You see that? In the trading world, right? So let's look at 12 hours. 12 hours give you a day is divided on how many 12 hours?
2.
12 hours. Okay, so let's look at 8 hours. How many 8 hours there is in one day?
3.
3. Let's look at 6 hours. How many 6 hours we have in one day?
4.
4. Very good. How many 4 hours that we have in one day?
8.
6.
8. So how many 2 hours that we have in one day?
12.
Eh?
12.
12.
12. Okay, very good. How many 1 hour we have in one day?
24.
24.
24 plus 1 second.
How many minutes? How many 30 minutes we have in one day?
48.
48. Well done. How many 15 minutes we have in one day?
80.
76,
88.
Eh?
98.
88?
98.
76.
Done.
76.
Okay, so very good. You guys are really good.
96. So like,
All right. So if you look at this, we're looking at this is the 15 minute. We didn't go to the 5 minutes, 3 minutes, 1 minute. So what you just did, they call that multiple time frame analysis. This is high level things you just did right now. Okay, so we're not gonna go too much into it, but that will tell you something. You remember that if we go to the daily time frame, right? You remember that this is, let me remove some stuff so we can get it really good. Okay, so the day is start. This is this candlestick.
Can you minimize the screen, please?
Minimize it or
No, not minimize it. The candlestick is kind of, yeah, I can make it. Yeah, yes. Yes.
oh, is it better now?
Yes, kind of, yeah, it's better. We can see it better.
Okay, you see this is here. Let me put it here. Let me put that here. Let me put that here. Let me put that here. Okay, this is not good. Let me remove that. All right, this is the body of that. Okay, so yeah, today, which it was Monday, right?
Mhm.
Okay, so you see, this is what happened to the dollar. Okay, the US dollar index. See, the value of the US dollar open, go down to 99.454, and then you go all the way up to 99.744. You see, that's where it's traveled today. You see that this is a daily time frame we're looking at. So if we go back to 2 days, now you see 2. This is, each one is 12 hours, right?
Yes.
Is these 2. Okay, so let me stop putting these guys here and here. Okay, so this one is 12 hours, this one is 12 hours, 8. So we're gonna have 4 of them. Let me bring this one here. Okay, and 6, 4, all right, everybody's seeing that, right? 4. This is 1, 2, 3, 4, 5, 6.
Mhm.
4-hour candle, right? It has in it, right?
Yes.
2. Okay, so now this is what happened to, this is a 1 hour time frame. Okay, so 24 candles. You see that? What happened to the US dollar today? Oh, 9 o'clock is here. Okay, so let's do it quick so we can do this. What you see, it's open here, it goes down all the way here. You see that? This
Mhm.
morning, last night, all the way today, earlier today, it goes all the way back here, and it's come back close over here. See that? Today it's open over here. Okay, now it's going all the way up right here. So you can see what happened to the US dollar today. So if we do a line chart, you see that it goes down. You know why we use the, if you look at the line chart, would it tell you that the price goes to that line today?
No.
No. See, it doesn't show you that. But the price went, if you do the candlestick chart, price go all the way down here. The line chart is deceiving because it's telling you the lowest price come today was here.
Mhm.
Actually, when you put it in candlestick, it goes all the way down here. So if you're trading this thing here, your account might be bleeding all the way down here. You have no idea. That's why we're gonna study candlestick, because it gives you a full picture of what's happening in the market. So you'll get there. So right now you see a bunch of gibberish on the screen right now, but you'll get there. Okay. So by class 3, you'll get that. Okay, 3, 4, you'll understand candlestick. Okay. So thank you everybody. We our time is up for my English people. That was good. We talk about a little bit. I show you a little bit. This is a little bit I'm showing you. So just for illustration, okay? That's why I'm showing you that. Not for you to be worried about it. Just you'll understand it. You'll be able to do the analysis, know when to buy and when to sell. See, now if you want to trade, the US dollar is going down. If you're in USD JPY, the US dollar is going down. Now you know what to do. Now at this point, the US dollar is go back up. As the US dollar is gaining value, you want to buy, right? But if the US dollar is losing value, what do you say? You want to sell. That's what we want to say. In this area here, when the US dollar is going this way, you would sell it. But when it's come back here, the other way, you would buy it. You see that? This is what I want you to know. In this area here, we will sell. In this area, well, as it's going up, we would buy that pair, any pair that have US dollar as a base currency.